Hey guys, what's up? This is Stock Retail coming back to you on a Monday, one heck of a Monday at that. Don't know if you're like me, but well, here on the West Coast, woke up um, and was like, hey, what the heck is going on with the market? What's going on with AMC? Why are we moving? And as usual, financial news media is not so helpful, right? They're not telling us the full story, or in some cases, any part of the story. I will say, so I had tweeted this morning, my first hunch was kind of around China. So I did a little digging today and actually ended up kind of looking at the Fed as well. So, what I want to talk to you about is just pulling up a little bit. It's really hard to see these red days. None of us loves it. It's hard to be at a spot where we're kind of at all time lows. I don't mind acknowledging that. I've said many times here that I want to be a voice of reality. And if in that realistic place, without any hopium, but also without despair, if the thesis still holds, then I still hold. And that's what I want to talk about today is this thesis is still very alive. And in fact, I want to point you to things that even some of us have said for years that are now playing out that very much match the thesis. And so if things, if you call the shot years out and it's playing out exactly as you called it, that's not a time for fear and doubt. That's a time to say, oh, okay, actually, the things that we said are being confirmed. So that's what I want to talk about, but want to do a little bit of education too on some of these big things we're seeing. Because, I mean, we're talking about the biggest financial institutions in the entire world. I mean, we're talking about the entire Chinese economy, and we're talking about the US Federal Reserve sort of central banking system. This is global finance. That's what you're watching in real time, and you're living through some pretty interesting times. So I'm going to talk a little bit about that. I'm going to tie it back to the thesis. And just as I go, I just want you to know that I still remain incredibly bullish on the future of this stock. Sometimes you got to go through tough situations to get to a destination you're trying to reach, and I believe that's what we're going through. So first off, a history lesson on the Fed. If you don't know, the Fed was created around like 1913, I believe. And then fast forward from there to 1933, the US government. So, also, if you don't know, the US Federal Reserve, the central bank, and there's a bunch of regional feds as well, is not technically part of the government. It stands apart from the government, although there is an awful lot of interwoven relationships and decisions there. So, you could have a whole discussion on the relationship between the government and the Fed. But just so you know, when I talk about the government versus the Fed, it is two entities. So in 33, the government ends the redeemability of the US dollar for gold. Just kind of interesting in light of some things that are going on and the ways that some folks have been talking about the US currency these days and potentially some big shifts coming soon. In 1934, then, so the Fed was basically supposed to move all of its gold to the US Treasury Department. And that would have resulted in negative equity. So that means basically the Fed would have had not enough assets versus their liabilities. So they would have had negative equity, and effectively at that time, the way things worked, the government would have had to kind of taken over, and that would have ended that sort of separation of the Fed and the government. So what happens is the U.S. Treasury just says, hey, we'll just write you a bunch of paper. So effectively, and I'm oversimplifying here, but effectively the U.S. Treasury writes a bunch of certificates for gold to the Fed. So the Fed gives the Treasury the gold. The Treasury gives the Fed a bunch of pieces of paper for the gold. And everybody says, hey, we're good. We've got the assets. So I think you can just sort of hear with a common sense ear how ridiculous that sounds. And that is, in some ways, a beginning, I won't say the beginning, but a beginning of using accounting practices to try to hide a lot of things and kick the can and not deal with real life issues, kind of disconnecting accounting from the real world. So the Fed moves the gold over, the Treasury gives a bunch of pieces of paper to the Fed. So here's some certificates for the gold, and that way the Fed gets to have a balance sheet that looks a lot better. Well, 90 years later, here we are, but basically a lot of new accounting gimmicks are in use. And now, actually, the Fed's going to run a deficit for years. This is effectively the first time, basically since that time in the 30s, where the Fed is sort of running a deficit. So what's going on? This is a big deal. You may even want to just Google, like, Federal Reserve running a deficit and just see what you come up with. There's a lot out there on that. What I kind of want to show you is what's been going on for the last really since the 2008 financial crisis. And to kind of also show you that, in many ways, I just talked about accounting gimmicks and writing pieces of paper and sort of not dealing with real life problems. In many ways, what you should see visually here that I'm going to show you is 2008 was never actually solved. It just got put on the Fed's balance sheet. So there were all kinds of problems. The worldwide global economy blew up. About sort of the mortgage-backed derivatives. And the sort of global liquidity crisis and a whole lot that went on. Well, so you'd think, oh, well, we're past that. We fixed that. That's a long time ago. But what I want you to see here, this is the Fed's balance sheet. This is effectively the assets being held by the Federal Reserve. So you can see mortgage-backed securities. That's what shows up conveniently right after 2008. That blue area, notice how that just shows up where we've circled here. Okay, and then U.S. Treasuries, look at how that explodes in 2020, but I'm getting ahead of myself. So if you think through, from 1913 to 2008, so for 95 years, the Fed kind of over time accumulates $1 trillion in U.S. Treasuries. And a lot of that U.S. Treasury is probably, I'd have to go do a little more digging, but a lot of that's going to be, there was times obviously for printing money, but also it's actually a carryover of that moving all the gold over to the Treasury and then the certificates that got handed to the Fed. So they're holding U.S. Treasuries. It's kind of this convenient sort of closed loop system. And we get to $1 trillion on the Fed's asset on the balance sheet, the Fed's assets on the balance sheet. But notice in 2008 how we suddenly spike. Boom, we jump up. And you've got a spike in this other as well, but notice how then here comes the mortgage-backed securities. So 2008, we spike from 1 trillion basically to 3 trillion. But from 2008 to then suddenly in 2020, we add another 4 trillion. So you can see for 95 years, we've got $1 trillion, we add $1 trillion to the Fed's balance sheet. In fact, why don't I show you this another way and then we'll bounce back. So for 95 years, you get to $1 trillion on the Fed's of assets on the Fed's balance sheet. The next 12 years, we add 3 trillion. So we quadruple. We go from 1 to 4 as a result, really, of 2008. That's what that is. And you can see that visually here, right? It just pops up. And then you start adding a little bit over time, but generally just popped up all in one go. And then 2020 hits, and we kind of double that again. We add another 4. So in 95 years, we add 1. The next 12 years, we had another 3 trillion. And then these past 4 years, we had another 4 trillion. So let's go back and show that visually again. So really, what you need to be seeing here is the 2008 financial crisis and COVID and the way that was dealt with was, effectively another financial crisis. I mean, you can't shut down the world's entire economy and supply chain and not have to do something about it. So effectively, what's happened, that's why I'm calling this, what's the sound of 8 trillion cans being kicked? The Fed has basically just said, we'll just put it on our balance sheet and pretend nothing happened. But you and I, in the meantime, are living real life, and people are out there, hiring, firing, feeding kids, having kids, birth, death, life, retirement, vacations, purchasing homes, whatever. We're living real life. That's not on the Fed's balance sheet, although what's happening is we're funding our sort of way of life on this balance sheet. It's a big deal. But here's the other thing you need to read into this. If you're saying, Retail, I don't fully know what you're talking about and what you want me to see here. Basically, the Fed, there was like a shift in 2008, and you can see it sort of got put on steroids these past few years, is the Fed kind of acts as like a backstop for the stock market in many ways. Not just the stock market, so you see the mortgage-backed securities, but it's all kind of related. Stocks, bonds, derivatives. The Fed is basically saying we'll prevent a market meltdown. I'm choosing that word market very carefully because, again, there's real life, there's Main Street, and there's Wall Street, and they've become more and more disconnected. Have you seen some days we'll have a good jobs report and stocks go down because stocks are saying, oh no, I wanted the interest rates to go down. But the Fed has to keep the interest rates up if people have jobs, because if people have jobs, they're spending money and inflation is up. So you've got this weird, twisted, I'll call it, relationship between the Fed and what they're doing and how they're supporting what I'll call like the 0.1%. Forget the 99% and the 1%. It's the 0.1% who is really driving what's happening at the Fed, and how they're backing up the entire market. And notice too, the past few weeks, not even few weeks, gosh, the past year plus, there are very few stocks that really are flying, right? And people call like the Magnificent Seven, for example. You can go look at my highlighted tweets, and I talk a little bit about some of this. Effectively, I think, without getting too deep into it, that a lot of the global economy and a lot of holding down some of these bad short positions we all believe that people are in is effectively happening through pumping the S&P 500, and really even to put a finer point to it, through pumping the Magnificent Seven. You know, I've tweeted before, and also you can kind of find in some of my highlighted tweets that to close a short, you have to have cash. You have to actually buy to close. And so I don't believe that shorts are sitting on a whole lot of cash. I believe they're sitting on positions. And so they like to troll us and say, well, shorts are wildly positive right now, and you guys lost and all that stuff. Okay, well, go ahead and close your shorts, and let's see how that goes. And so a lot of what's going on too, I think, points to an asset bubble. But I'll get into that in another video. So the point is, you need to see that the Fed has been pumping their balance sheet to sort of prop up the market. But so you got to think through, if the Fed has been a buyer, and I mean, you can see it, the Fed's bought $7 trillion worth of assets over the last, 16 years. Whereas 95 years before that, it was 1 trillion. So that is a significant shift in what we're doing. And, if you want to try to get political, you honestly can't, because it's been under every single, I say every single, it's been under the Republicans and the Democrats, both. And so this is not a uniquely, any side issue. This is just a lot of nepotism and basically financial incest. And I'm sorry to use that term. That's a terrible term. But we have some really just bad relationships and circular relationships, and, bankers becoming regulators of the banks, and regulators moving to the banks, and all of that stuff, right? So we've got a lot going on, and a lot of politicians receiving money from these people. There's a very broken system in my mind right now, and that is also why I'm very loud about AMC and everything going on. So think through, I digressed a little bit there though. If the Fed has been a buyer of assets to prop up the market, what happens if the Fed becomes a seller and starts trimming its balance sheet? So then what you need to know is the Fed, starting, I believe, around last September, started flashing a loss. So the Fed has made a lot of money on interest and loaning money and all of that for many years, and contributes that money to the U.S. Treasury. They give it back. So it's kind of almost like another tax that they give to the government. But now the Fed recently has been running a loss. So that's what I was saying is kind of historic. It's a big deal. I will be doing further DD to kind of share more with you guys on that as we go. I encourage you to be learning about that and what that signals. And besides that, the Fed has also talked about tapering, and I'm going to show you some old DD. We're talking years old, where I had talked about this notion of tapering. And what does that look like? Tapering just means the Fed becoming a seller, trimming their balance sheet, taking some of these assets off their balance sheet and effectively dumping them. You want to talk about a pump and dump. This is a 16-year pump that I believe we may be headed for part of the dump from the Fed. So it's interesting that our government would like to go after, smaller pump and dumpers, who I am absolutely against. I have been very clear, I'll never pump anything. But, the number one pumper of all time is our own Federal Reserve. So let's tangent for a second here. Not really a tangent. It's another topic I want to bring up, and then I want to bring it all together. But just hold that thought before I do change topics of the Fed becoming a seller, and perhaps that's relating to some tough days we've had recently, because it's pushing a lot of other folks to get margin called, is really what we're talking about, because assets decline in their value, and that starts to hit people's positions, and it changes the math on their leverage, and you get margin called. When you get margin called, I'm going to show you, again, this DD. You can go read all about it, where I in a lot of detail, describe how margins work. You don't sell your shorts. Again, remember, you buy, right? Hear that word, buy to close. So if you're margin called and you're trying to come up with cash in a hurry, you're selling your longs. You're selling positions you have to scrape the cash together so that you don't get automatically shut down on your shorts. You don't want to get called on your shorts. That's a bigger problem. Okay. And in some cases, you could sell longs to buy to close shorts. That could certainly happen, but I do not believe we're seeing any closing, and we're going to talk even about what the data shows on that as well. Okay, we've talked about the Fed a little bit. Now we need to also talk about China. So when I woke up this morning, I saw the stock market was down. My gut reaction was just, okay, I think maybe is this China related? What's going on? Because I mentioned I couldn't find any news or anything. Um, and so now I just think it's both Fed and China related, is my hunch. Um, so if you can see, the Shanghai Stock Index has been down 17%, right? So their total market down 17% in the last 6 months. Of course, you know about Evergrande and others. There's a whole solvency crisis going on in China. You can see just a couple headlines I grabbed that, angry Chinese take to U.S. Embassy's social media account because there's censorship there, right? So they're trying to get through the great sort of Chinese firewall. Um, you can see then at the bottom right, about 6 trillion in market value has been wiped from Chinese and Hong Kong stock markets since their peaks in February 21. Uh, Interesting, in about that same time, we've added 4 trillion to the Fed's balance sheet, right? So those don't perfectly match, and I'm not suggesting there's any kind of one-for-one relationship, but as some assets are shrinking in value, the Fed is, again, backstopping overall markets. And so that just is going to be a big deal for them to sort of taper and clean up the balance sheet. Look for QT or look for tapering, and you can learn a lot more about that. QE was quantitative easing, QT is quantitative tightening, just another term for the Fed turning into a seller. All right, so if the Fed is tightening things, if interest rates have been hitting people, we know there's a lot going on at the banks, and we know everything going on in China. I believe that is what you're watching in the markets. And yes, it really stinks to watch AMC be hit, but you have to think too how much is driven by algorithms, how much is just automatic high frequency trading. And in some ways, the algos have been set loose in the market. And, I don't know to what degree those are really controlled by the humans anymore. And so, and then honestly, there's competing algos and all that stuff. I understand that. That's another topic for another day. But, the algo sees a sell off and it knows AMC is a volatile stock. And if you looked across the market, that's one thing I advise you to do on tougher days is scan out across the whole market, and you would have just seen red, 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 red everywhere. Yeah, just all over the place. So it was not an AMC issue. So that's what I'm trying to pull myself up. I'm trying to pull you up to say, okay, if it's kind of everything, then what's behind the everything? And when it's everything, there's bigger stuff going on. And you got to understand too, I think it was just last week, Jerome Powell switched his language to very sort of surrendering language, where he talked about the U.S. government's sort of debt crisis being kind of unsustainable now. Well, that's not language he's used before, and when these guys switch their language, it's not by accident. So something has shifted, I believe, and it's something I've been kind of talking about for a while. And in fact, I would say related, I'm trying to have a balance. Some folks have said, hey, I don't love that you're starting to be a little bit cryptic sometimes. And I understand that. So sometimes I'm just letting some people know that I see some things. Other times I'll try to just sort of be more who I've always been, which is just keeping things simple. I'll try to strike that balance. I had tweeted, you can see this is back in December, about, I just tweeted this picture, so that's very cryptic. Really, I was talking about some things going on with Bitcoin and the ETFs, and you can see just how I've worded it at the bottom left here. In a storm that's impacting assets and currencies all around the globe, something with a strong foundation is going to be needed. So I do believe there is a lot that's been going on in terms of sort of, let's call it the chessboard getting set, and why I've been talking a little bit more about Bitcoin for a while. I believe that's related to something I've been calling the great unwinding and tokens, and I know a lot of people have been asking me to describe that in a lot more detail, and for now, I'm sorry, I'm not going to do that today, but just want to remind you that this was something I had been talking about. and really relates to all of this going on with the Fed and China and assets and currencies. And, even some of you are tracking that debt clock, related to all that stuff about the Fed. Let's go back. Where was that? Interesting that, kind of the last time the Fed would have run negative equity was when we moved the gold from the Fed to the Treasury, and the U.S. government ending the redeemability of U.S. dollars for gold. If you look at that debt clock, there's a lot going on there, kind of talking about what's perhaps happening with the currency, and I think you're seeing some of that play out. Also a little bit cryptic there, but I think a lot of things are coming out over time. So what I want to so here's something more simple. DD that I had posted 2 years ago, oddly December as well. This was a December of 2021, where I just was pulling together. You can see the list on the right. That's actually a screenshot from this DD that you can go out and find on Reddit. If you go to my highlighted tweets, there'll be a link there, or you could just look for this title of this article. And I discuss everything on the right. So in particular, you'll notice margin, liquidity, there's tapering right there in the middle. Interest rates. I had been talking before it happened about the interest rates going up. I had been telling you that the Fed would be tapering and turning into a seller. And so that's what I'm saying from the beginning of the video. If I'm seeing things happening that I called out 2 years ago, why would I now, get nervous about them happening? It's like, no, I saw these coming. And if you read this article, you'll see how I believe it bullishly relates to AMC. And yes, I know right now, boy, the stock price does not reflect that. But all of the events happening at a global, macro, big picture level are exactly as, not just myself, so I'm not trying to take the credit here, but, I did write this article. So as far as the article and what I was saying, it's playing out as we said it would. So, that actually should be confirming, not disconcerting. And so I am feeling very confirmed in what's going on. I sure would like our price action to reflect it, but I still believe that's coming someday. And so here's the point. There's some things that I want to not forget for myself, and I would just encourage you to not forget if you've been in AMC. First, we just proved the concept. Like, it's not that long ago. Let's not let our brains forget that Q2 and Q3 of last year were net positive earnings. And Q3 actually was kind of an all-time, record breaker for Q3. If you compare it to 2019, we had about half the movies and we had higher profits. And that is a big deal because that was before we had any distribution. That was before the expansion of popcorn to Amazon and Kroger. And that's before adding candy, So you take that level of movies, if we even had that now, we'd already be now more profitable than what was more profitable than 2019. So we'd be like a plus. And then once the strike blip is over, imagine adding more movies to that Q3. So what happens if you have more movies to an already profitable quarter and more popcorn and add candy and add distribution? You can understand why I'm incredibly bullish about this company, that, it was already at profits. I believe sort of mega profits are coming. And you can just see the sort of very simple reasons I believe that. By the way, we also have less debt since then, which means expenses are lower. So if we're going to be having higher revenues and lower expenses, it doesn't take a genius to figure out that's a pretty good thing. Right now, we have our highest shares ever on loan, at least that I saw this morning. Was 28 million is the last reported. Now remember, shorts are self-reported, which, tells you a lot more about that sort of terrible relationship I'm telling you about, where, regulators are allowing shorts to self-report, hey, here's how many shares I have borrowed. That's ridiculous. So we all understand why that would be, the temptation would be too great to fudge those numbers. But even numbers that perhaps are manipulated are still reflecting the highest ever shares on loan for AMC, coming on the heels of us just having profits. This is the stock, or the stonk I've said here, that had record FTDs. I have a whole video you can go find. I think it was like something about 1,000 times FTDs. It's like AMC had 1,000 times whose FTDs, and it's like 1,000 times any other company you want to look at. Apple, I think I looked at maybe like Nike and Google and some big companies. Insane amount of FTDs on our stock. And if you wonder why I'm bringing that up, that is another sign that there is manipulation, that there are naked shorts, that there is fraud. And I'm not just making that up. That's not conspiracy theory. I showed you academic articles and the SEC themselves citing exactly what I'm saying, that FTDs are a sign of all of that. So if this is a company that just had profits, and since those profits has actually added more revenues and reduced expenses, and this is a company with the highest shares on loan it's seen in our whole time here, and the company that was having these record levels of FTDs. Meanwhile, the people who created the AMC tokens are going to jail. Don't sleep on that. I've talked about that a few times. You can find videos and tweets on that from me. We have not cleaned up the tokens yet. I am adamant and confident about that. That is a big deal. That's part of that arc I was posting as well. I've shared a little bit of hints, been a little bit cryptic, but I believe everything unfolding with Bitcoin and some other things in crypto and Sam and CZ going to jail, I believe it's the great unwinding of our tokens. Meanwhile, the strike blip is that. It's a blip, guys. Movies are coming back. We were on a very, very steep up and to the right trajectory. Okay, so you hit a speed bump. You have a little dip. There's a pothole in the road. But guess what? You get past that pothole, and there's a whole lot of movies coming. End of 24, throughout 2025 and 2026. Meanwhile, well, I guess I kind of said some of this already, but derivative swaps, cross-asset trades, tokens, and various other assets are basically hiding the problem. This problem is a whole lot bigger than those 28 million shares that are on loan. Those are just like a tip of the iceberg issue as far as I believe. So you've got to remember, last thing here on the sort of don't forget, the stock price is not the business. All caps, not. The stock price is not the business. There are accounts I've seen on Twitter. I'm sure they're on YouTube. I'm sure they're in Reddit. I'm sure they're on Facebook. And I know they're on Fox News and some, CNBC and the people who love to troll us. By the way, shout out to all the mainstream media who has zero credibility and zero integrity. We see you, and frankly, I don't watch you because of that. And, you're writing your own end by not being willing to deal with truth and reality. So, I don't know, good luck to you. Understand that there are people on all of those platforms who have been trying to get you so focused on the stock price to basically say, see, you lost, and the company's going bankrupt. But understand, I go back and look at the last video if you missed it, to talk through bankruptcy versus stock price and how solvency really works. Your stock price does not determine whether you can pay the electric bill, whether you can pay your employees, whether you can clean out your accounts payable and actually buy the supplies for the popcorn, let's say. Your revenues and your expenses determine that. It's your cash flows, right? You just got to watch your cash flows. So the point is, in fact, here you go. Let's talk about that business. So remember Adams used that language of moving from survive to thrive. If, let's say there was, just think real life. Let's say you knew there was going to be a famine. So you would gather enough food to wait out the famine. Okay, check. Adam gathered a lot of cash last fall, and that's why I was a voice saying, hey, it's actually making sense to me that he's doing this before the strike blip. Then you would wait out the famine. That's where we are now. Guys, that's not a fun part of the journey. Let's acknowledge that. We're at the part where we're waiting it out. We need the movies to come back, or we need a whole lot of people to decide to use AMC for distribution. And I know that Adam's working on that. We just got, the Matt Damon and Ben Affleck deal here in the U.S. As an exclusive for AMC. I know his phone was ringing off the hook. I'm sure we have more distribution coming, but until we see a lot of it, it doesn't solve the issue. We need more movies. So we're at the part where we're waiting. But the great news is we're waiting with food in the cupboard, right? Because Adam gathered the cash to survive. There's a reason he used that language, move from survive to thrive. And then after you wait, the good times are coming. If you followed me for a minute, I'm very good at forecasting. I've been getting my forecasts right. In fact, I've been beating Wall Street on the forecast. That's a heck of a thing. Somebody ought to just hire me to be their analyst, I guess. But you'd have to pay me a bumload of money because I'm a former executive. But I don't know. It seems like it'd be worth it. You could make a lot of money off my forecasts. All right. Enough of that. But the point is, if my forecasts continue to be right, end of the year and then 2025, we're going to see very, very large improvement. So that's kind of the bottom here. So we've got about $1 billion in cash. We just need to get through this quarter and the next 2 quarters. But we've got that $1 billion in cash, and it's not like we have no revenues coming in, right? So there's, you're kind of bleeding out a little bit, but you've also got new revenues coming in to help you buy time. This has always been about time. I've got other videos. I called it a runway. You just need a long enough runway, long enough time to get the plane up in the air. And I see that improvement by the end of the year and mega improvement next year, and then even more in 2026. So I'm not concerned also then about that 2026 debt, because think about how much Adam has been cleaning up the balance sheet, reducing our liabilities. That's that debt. Every time you see him paying down debt, think of our balance sheet getting a little better. He's been cleaning that up. Meanwhile, we've been increasing revenues and diversifying. A bank looks at a company that has diversified revenue streams as a lot safer. And so what Adam's doing is he's moving us to a place where, one, the bonds get a much more favorable rating. So you can kind of look up what happens with sort of like Moody's and Standard & Poor's and some other people who kind of rate bonds. Maybe you've heard of junk bonds, or you've heard of like AAA and A bonds and all that stuff. So there's a time coming when our bonds will be rated much better, which is a big, big deal for our company. And then what's more is, if any of you have ever had a house and you have refinanced your mortgage, you just have to prove to the bank that you can pay the bills on the new mortgage. And if you can, then they're going to give you the new mortgage because they like doing business and they like all the fees that come with that, and they like having your interest get paid to them. Well, what's going on right now? Banks are having a hard time. They need business. Well, when Adam goes to them and says, hey, I can show you that I've got revenue. I can show you I've cleaned up my balance sheet. Hey, I've got this big bill coming in 2026. I'd like to buy myself time. How about you refinance with me? And now suddenly that debt's not due till like 2028 or 2030 or something, right? That's coming. I'm stating to you opinion. I'm stating to you forecasts, but first of all, it's just plainly logical. It's how the world works. It's how finance has worked for generations, and it's coming. And so every time the shorts try to point to 2026, I'm immune to it. It does not concern me. I am unconcerned. And you can just see clearly I'm saying it will be refinanced. Of course, I have to acknowledge that's opinion, but it's an informed opinion. I have 2 master's degrees in business. I worked at a Dow Jones company. This debt's going to be refinanced. Finally, in summary, I've said AMC has the war chest to survive. And apes, frankly, we're not letting anything else happen. I'm not leaving, and I believe that millions of you are not leaving. So, it's done. It's happening. We are going to survive. Global macro events, the Fed, China, these things are really, really big, and they're shaking the very foundations of what I'm calling old ways. I think we're in the middle of a shift to something different, and I think that's part of what's going on with Bitcoin in particular. I believe big changes are underway. You've heard those pivots. People are talking about the elephant in the room. That is not something the Fed really did. They used a lot of code and cryptic messages, and now Powell literally used the word unsustainable publicly. That's a big, big deal. And also, by the way, it may signal that he's not the boss anymore. That's also part of what you should not sleep on. I believe for AMC, profits are coming towards the end of 2024, and 2025 is like pretty much a sure thing in my mind. And then 2026 is amazing. And so I do believe the 2026 debt will be refinanced. So I can wait without fear. I do not like this stock price. It really stinks. I am really tired of seeing my stock go down. Okay, I can acknowledge that to all of you. It's okay for us to be real together. But I hope you hear I'm still able to say that with a smile, because the stock is not the business. And the shorts are going to get the business. Let's go.